Hi everyone, welcome to the Christmas Eve edition of Midweek Market Update. I'm Ashley Rosser with Victory Fiduciary, and today you may be wondering, is Santa Claus going to be coming to the stock market or what? That's kind of been the tones and the questions that I've been getting, and so it's been a really volatile first few weeks in December. Actually though, not really out of the realm of normality of what we typically see. And so if you remember, last video did discuss the fact that we can really see some sloppy trading, especially early on in the month. And so we had options expirations that happened. You have people taking maybe their distributions, so areas of their market that have grown disproportionately. A lot of times this time of the year, they may be trimming them back, putting their holdings back to where what their intended percentages are. I'm going to kind of show you how that's been playing out. We've also just been seeing that mutual funds have to give their annual distributions, which is causing them to need to make sales to be able to satisfy those. So there's a lot of year-end kind of like tying up loose ends. It has to happen. And so that can really cause markets to have some choppy, sloppy trading. Now, last 3 days prior to yesterday, Tuesday, markets were really involved in a fairly sharp sell-off, and so for 3 days we saw significant downward pressure on markets. And so part of what was likely playing in was just the fact that we get these kind of year-end housekeeping items, but then also there was some outside pressures as well, finding out that the Build Back Better bill was officially squashed over the weekend. So what this means for markets is that some of that liquidity that maybe had been counting on for right now, at least, that we're not going to see that stimulus that kind of gives those instant boosts to businesses and to the stock market itself, for now is on hold. Although I think it's important that it's likely that after the new year we will probably come together and something will be passed, just not that specific bill, but that with the Omicron variant and just kind of some of those uncertainties, those are things that may be weighing on. And if you're watching CNBC, well, you saw the news flashes, the sell-off continues. And well, I mean, really, when you look at the grand scheme of things, these were kind of short-term volatility, really should have been expected just kind of for the time of year that we were having, as well as, markets had been, we were still kind of extremely deviated. Yesterday, very, very strong bounce that we saw in the markets. Those areas have been hit very hard. Again, pointing to the fact that it's likely that some of this volatility we're seeing was really just kind of portfolio repositioning as well. So I do think that we've probably set ourselves up for the situation really for Santa to be able to come to Broad and Wall Street over these next few days. And so typically when we talk about the traditional Santa Claus rally, we're really talking about the last 5 trading days of the year and then the first 5 trading days of the new year. And so now having that correction that we've just kind of went through, we've actually really kind of set ourselves up nicely to allow Santa Claus to visit our portfolios. And so what I would like to do though is point out, if we can escape out of here, and then I just want to show what I just want to kind of show is, so I talked about the fact that we were seeing some interesting things happening in the market. So this is Apple. Apple's had a really, really great run over the past year. Although you can see Apple's really kind of been under pressure on these last couple of days. And so despite the run-up that we've had, you might be saying, well, what's going on with Apple? Why are we seeing this kind of like sharp decline over the last couple of days? Well, it's likely people who have Apple in their portfolios have decided to kind of trim back their holdings. Maybe they say, you know what, I don't want Apple to have such a large kind of percentage of my portfolio. I want to trim back some of those earnings and maybe put it back to somewhere that's been beat up a little more over the year. And so if we can go to Verizon, I'm going to kind of show same idea. So Verizon has been under pressure really for most of this year. And so I can kind of show you here that it's been somewhat of a tough year for Verizon. So if you look back just at the last 6 months here, I mean, you can see Verizon has really just been on this steady decline. Although if you go back now 1 month, all of a sudden you can see over the past couple of days, it popped above its 50-day moving average. We've seen a lot of volume coming into it. Well, likely it's the same idea. It's not so much that Verizon suddenly that its fundamentals look significantly better in the past 5 trading days, but likely that investors who have this holding are probably, now that it's been beaten up so long, adding a little more back to their shares to bring it back to proportion. So just to kind of just show you, it's a nice, easy visual to see that, a lot of these things we've seen kind of going on in the market. Yeah, there's probably been some outside pressures, which was probably kind of adding to some of that selling that we saw these past few days, but it's also kind of likely this was more normal positioning. And so, as I mentioned before, those last 5 days of the market, of the year, what happens is mutual funds, they do what we call window dressing. And so they want to make sure that any company that they want on their books as holding, it's got to be on before the end of the year so that they can say that they held it. So it doesn't matter, even if they only held it for 5 days, at the end of the year, when their end of the year financials come out, they want to be able to show, number one, what were they holding on to, as well as kind of preparing for the next year. So we've seen a lot of choppiness as we've seen those changes. So it's likely now window dressing is probably either being done or is kind of complete, and so we're kind of seeing that cycle finish out. So just a couple of things that I wanted to kind of show you, because it's definitely been an interesting couple of days. I want to talk about the small caps right now, because small caps, it's interesting. While when we look back, small caps have really hardly done really anything, but they've been really volatile, particularly. And if you look back at 6 months, I mean, we've gone, well, actually, we're negative. But when you look back to the summer, I mean, we've literally gone nowhere. But we've really had just small caps in general have been really under pressure, specifically since November. So coming off those November highs, so we've struggled. So we actually deviated the 50 and the 200-day. This is the Russell 2000. So today we're trying to make another climb higher, as they are positive today, to kind of at least get back to those levels of support. So small caps, we've seen some run-ups, but have just been really volatile this year. And again, they've really not gone anywhere, particularly when we look at the last 6 months. And the same is really to be said when we look at our mid caps here. And so if you look at the Russell mid cap, really the same idea, that you look back 6 months, I mean, we've done nothing except for been under a pretty significant amount of pressure since November. And you can see again now held up a little better. We're just kind of resting on that 200-day moving average, but broken through that 50-day. And so again, kind of just signs of things that we should be really watching in the market. Now, the S&P 500 is a bit of a different story, although the same is not really, you can't really extrapolate the same when you look at what's actually undergoing the hood of the S&P 500. But when you look at just the S&P has really still had a nice advance over this past year. And so if you look back at 6 months again, you can see times as we were under pressure, but not nearly as under pressure as some of those other areas of the market. So the S&P 500 isn't necessarily giving us a great snapshot of some of the other areas of the market. And again, looking at the S&P, we're going to get into this more the next video. Looking at the S&P 500 isn't necessarily a great snapshot for what's really going along globally in that fund, because it's still really being held up by just a small percentage of companies, and there are a ton of companies that have experienced significant declines over the past 3-6 months. So we're going to get into that in the next video, but again, I just wanted to show you. So S&P, while it has been under pressure here, certainly has been able to hold up a little better than the other two indices that we talked about. So, is Santa definitely coming? Are we definitely going to see a super strong finish? No, nothing is ever definite, but I do think that after kind of being able to see some of this cooling off period that we've had, I think that markets are set up to at least see that end of year rally come. Is there a lot of room to move? Probably not, just because of some of the runs that these other areas have seen. But again, I think that just kind of looking into historical just what we see historically, as well as what we know that these fund companies will do, as well as what investors, what their patterns typically are. I think that it's probably likely that we will see at least some strong bump moving into the end of the year. So if you've been kind of sitting back wondering, hey, when is Santa coming? Ashley talked about the Santa Claus rally. Santa isn't actually late because he typically doesn't come until those, like I said, those last 5 trading days of the year, and then he usually sticks around for the first 5 days of the new year. Now, one caveat there is, though, if Santa does not come, so if we do hit that naughty list and he doesn't come, that typically does not bode well for the next year. So, and we can look at that. So hopefully, though, next video we're talking about the fact that Santa was good to us and kind of what gift Santa brought us this year. So that's just what I wanted to get into today. And so really just want to take, though, a moment and just thank you so much to those who have just really been faithfully tuning in. We've been really excited to be able to kind of bring this to our clients, as well as to those who are not our clients, who just like to come in and listen. And so this new year, we're looking forward to the new topics that we'll be discussing, some of the new experts that we'll be having coming in, hopefully to really use this as a resource and education for both our clients and those who just tune in because they would like to be more informed. So what we would love to do right now is to just wish you and your family a very Merry Christmas, to those who celebrate, as well as wish you a blessed and prosperous New Year. And so we're looking forward to continuing to be here for you. If you have questions, you can always email me, AshleyR@victoryfiduciary.com. Otherwise, have a great day, and we'll see you in the new year.